course, Investment Banking University's course on how to become an investment banker. Investment banking is my passion, and I hope to communicate that to you so that you can truly find out what you're passionate about. If it's knowledge working, if it's investment banking, if it's accounting, whatever it is, I want you to do it enthusiastically. So this is our course on investment banking. We're going to begin the course with reading from our book, which is going to be the preface, which is going to set up our course. So let's just read it out loud here. So there are many investment banking courses out there that claim that financial modeling and valuation is the core work of the investment banker. This is simply not the truth. The core work of the investment banker is M&A origination, mandate target matching, and deal structuring. It should follow that a course on investment banking should be based upon the same. It is the good fortune of everyone in this room that they have encountered such a book and a course. Investment banking, M&A origination, execution, financial modeling, and valuation explains M&A origination, mandate target matching, and deal structuring. This is how investment bankers actually make their money, like myself. For those new to investment banking, you're going to want to first clarify whether or not you're going to work on the sell side, meaning investment banking for the rest of your life, or if you just want to pursue a few years in it, translate that to the buy side, like private equity, corporate M&A. The skills that you will need to get started in investment banking are different than those that you will need to have a long and successful career in investment banking. The role in investment banking transforms from one that is research, financial modeling, and valuation based into one focused on M&A origination and facilitating the M&A process. Mergers and acquisitions is the core product of investment banking, and the other products such as advisory and capital raising simply support this. We founded Investment Banking University to prepare students just like yourself for bulge bracket investment banking opportunities as well as middle market investment banking career opportunities. Smaller investment banks like the one that I own, AltQuest Group, that can give you the opportunity to get your foot in the door in order to pursue finance for the rest of your life. So we see a paradigm shift occurring in the field of investment banking. The idea that you need to spend nearly 3 years of your life as an analyst doing 80-plus hour work weeks building financial models to become an actual investment banker is in fact a faulty paradigm. The real value added as an investment banker is not necessarily financial modeling and valuation, but rather the takeaway of this course, what I want you to take away is M&A origination, mandate target matching, and deal structuring, putting a deal together between a buyer and a seller and taking a fee for it. You don't need Goldman Sachs' permission to be an investment banker, just like you don't need McKinsey's permission to be a consultant. Investment banking for private companies in the middle market is a great way to build your initial coverage as a career in investment banking without sacrificing your family or your health. So this is going to be, as you can see on the board here, the steps to becoming an investment banker, and we're going to discuss that in just a little bit, but what we want to start out is the methodology for investment banking that all investment bankers and private equity professionals use is called perpetuity science. We're going to get into that in just a little bit. But the first question we're going to ask here today is, what is business? Can anybody raise their hand and tell me what business is? Anybody? Okay. So business is the coming together of the industry, meaning the work, along with the capital markets, to build a financial perpetuity. A perpetuity is something that generates cash flow continuously through time into the future. So we have a model for perpetuity right here called Perpetuity Value. This is the only formula I'm going to give you guys today, but I want you to write it down. Perpetuity Value is equal to cash flow, CF, over, meaning divided by, R, the discount rate. So your cash flow is actually what's called a benefit stream. The reason why we're investing in these assets is to generate a benefit for ourselves in the form of cash flow. That's why the CF is here. In terms of the R, when modeling a cash flow into the future, we have what's called risk. And risk decreases the valuation of our company or our future cash flows at that risk rate. So that's going to be called our discount rate. That's why it's called discount rate, because it's discounting our valuation. So our benefit stream can be modeled into the future with different cash flows into the future. So this is going to be called time value of money. So I want you to write this down as well. I want you to write down time value of money. And the time value of money says that cash flows in the future can be discounted at a certain rate to give us a value in today's time period. So, for example, Facebook is a public company that everybody knows here, VK, like Facebook, right? Facebook is a public company that has cash flows into the future, and we model today's value of a public company like Facebook based upon their future cash flows. So their future cash flows are CF1, CF2, CF3 into infinity, and what analysts do is they model this cash flows discounted at a certain discount rate to get to the perpetuity value to then value the company. So that's what we're ultimately doing as investment bankers, is we're determining a valuation for a company to then help facilitate a transaction as it relates to this financial perpetuity. So the next thing we're going to take a look at is, in addition to our perpetuity value, we have to be doing something with our perpetuity. There are certain sides of the perpetuity. So the different sides of the perpetuity are here modeled. There are the build side, the sell side, and the buy side. So these are the three different sides of the perpetuity. I want you to write these down. And if I'm moving too fast, I'm going to let everybody take a break here and write down whatever they need to write down, okay? So let's make sure we write down this formula. Perpetuity value equals CF over R. And then as it relates to the different sides of the perpetuity, we have to write down the build side, the first, that's going to be entrepreneurs and corporations. The sell side is going to be investment bankers like myself in Wall Street. And then the third side is going to be the buy side, which is going to be made up of private equity groups and corporate M&A departments. And so this is the work of capitalism. So capitalism is what is business, perpetuity science, and the sides of the perpetuity, as well as the phases of the perpetuity, which I'm going to write on the chalkboard in just a little bit. So let's make sure we write this stuff down. So the build side is entrepreneurs and corporations. These are those that are answering the question, how to build a perpetuity. How do we build a financial perpetuity like a Facebook in the future, or something like a Facebook? Maybe they're like a GE or a GM, making cars, making an app, that sort of thing. On the sell side, investment bankers like myself facilitating the sale of public companies, or private companies we might add, financial perpetuities. And then on the buy side, private equity groups and corporate M&A departments are actually buying and selling perpetuities as well. These are what the build side connects with on the buy side, and then the middle ones are the investment bankers that actually take a fee for doing this. So let's erase this on the board. Has everybody written this down? What is business? Yes? Okay, we're going to erase this now, and we're going to move on to the different phases of the perpetuity. And we have to say, when we're talking about a financial perpetuity, we're really talking about a public company. A public company is on a stock exchange like Facebook. When they get really big, and you see, and you can look them up by ticker symbols, like Facebook is, I don't know what the ticker symbol is for Facebook, for GM, for example. What is it? FB is Facebook's ticker symbol, right? So that's a financial perpetuity. A proxy for a financial perpetuity is a public company.